The technical analysis revolution. Hey, what's going on? Today I'm basically going to show you an easy and pretty cool way to analyze stocks. I don't want to take up too much of your time, so let's jump right in. First off, who am I? My name is Amay and I'm founder and creator of The Wild Investor, SpeakStocks.com. I also manage several financial newsletters and have a couple ebooks and courses floating around the internet. I have 5 years experience in personal trading and have taught over 1,000 people on how to enter the market. The reach expands over hundreds of thousands if you include all the visitors to my site. Finally, I have a proven track record, as all my picks are on display at The Wild Investor, and quite simply, I make people money. So now that we got all the formalities out of the way, let's get right into the meat of this presentation. What is technical analysis? It's the process of predicting price movement based on the analysis of a stock chart. So basically what that means is it determines what the price of a stock should be by just looking at the stock chart. It requires no knowledge of financials or balance sheets, so you're not dealing with any company numbers or earning reports or whatever you want to call it. If you can find patterns, you can use technical analysis. It is that easy. And it limits risk by spotting buy, entry, and exit points. In other words, you can visually see where strong and weak points of a stock are to let you know when to buy and when to sell. Technical over fundamentals, really quick, fundamental is the analysis of a stock using company numbers, such as earning reports and balance sheets. And while there are obviously pros and cons to each method, I prefer those of technical analysis. For one, it takes the emotion out of trading. We'll look at an example on the next slide where fundamentals would have told you to stay away, don't even get close to touching it. But if you pay attention to the technicals, that would have resulted in a 300% return gain in just a couple of weeks. Technical analysis creates more accurate price targets. You avoid manipulation by accounting standards or worded statements. Companies can use various loopholes or accounting procedures to mask or disguise any potential bad numbers. And then also CEOs and other execs can also choose their words carefully to perhaps mislead or circumvent the real problems. So, it's kind of iffy. Can you really trust what they're saying? Whereas technical, you're looking at a chart and no one can change what the previous history of the stock was. Less work and less time than fundamental analysis. With technical analysis, all you have to do is look at a stock chart. Whereas fundamental analysis requires you to dig into reports and balance sheets. And then you also have to mess around with big numbers. Maybe that's fine for you, but a lot of people don't like to deal with numbers. And then any time frame. Whether you're looking to make trades every minute or just a few times a year, technical analysis works, whereas fundamental is not necessarily best for short-term analysis. So now we'll look at the example of a stock chart. The charts can be found free through your brokerage or third-party sites. My favorite is stockcharts.com. You can see right here in this example, I'll have a link. If you got this through an email, I'm sure I'll send a link through there, or there might be a link at the bottom of this video somewhere, which will give you more detail to what this chart actually, means and how to read it. But just quickly going over, you can see the stock chart gives you the history of the stock price over a given time frame, and once again, you can determine what that time frame is. So in this case, we have a 3-month time frame for this certain stock, and basically what it does is that you can look at certain indicators. The way the stocks kind of coil up together, the way they see patterns. You can see when stocks are going to break out, and then you catch that huge move. You can see that there's that huge bar right there in the middle of the stock. And that was a breakout that you could have easily caught. Once again, check out the article that I'll link to somewhere within this video, around this video, whatever. And it'll give you much more details on how that all works. So if this seems like something you'd be interested in and you really want to get a grasp of your own trading, then check out Chart Pattern Manifest. It's a new package I've created. It includes over 20 patterns and indicators that you can use right now to both find and make profitable trades. Over 2 hours of video footage that includes commentary and case studies. Then you also get supplemental trading reports and templates to help develop your personalized trading strategy. Basically, the 20 plus patterns and indicators that give you kind of like building blocks. And then these trading reports kind of give you the blueprint, so you know how they all go together to develop your own trading strategy, which, kind of give you like a factory. You spit stocks in, and then if they're good, they come out, and then you buy, sell, just simple as that. And then while everything of Chart Pattern Manifest does revolve around technical analysis, I also teach you everything I know about trading stocks. So, even if you're not interested in just charts or technical analysis, but you kind of just want to copy what someone else does, you can do that through Chart Pattern Manifest, as I teach you everything I have, including my personal trading strategy. And then finally, you get direct access to me as support. So once again, if it seems like something interesting to you, go check out chartpatternmanifest.com. Or if you have more questions or want to run something by me, contact me at support@chartpatternmanifest.com. Once again, thanks for watching this video, and I hope to see you soon inside.